Hi everyone. Today we did get a slight rally and then a bigger sell-off into the close post FOMC. The FOMC itself was not really that big of a deal, but it also didn't spur markets to new highs, which for me means this is likely to continue lower here. But let's take a quick look at all of the charts as we head into the Juneteenth holiday. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So we got the FOMC today, and they did hold rates steady as we expected, as we talked about in yesterday's video, but they did continue to signal that we are going to get 2 more cuts this year, which was in line with their previous statement. So the dot plot did kind of move up just a little bit over the longer term, but in the short term it did stay the same. And you can see that here, cutting off 1 reduction for both 2026 and 2027. So you could argue that is a little bit hawkish, but not enough for it really to matter in the short term. The other thing that I thought was interesting during the Q&A portion was Fed Chair Powell said that he did expect a little bit of a jump in inflation over the next couple of months. Markets did not react well to that, and they did tend to move a little bit lower on that data. We had a move down initially on the statement, and then we had a slight reprieve, and then that statement from Fed Powell did move markets lower. And then looking at the target rate here, you can see we've been flat since December, and we're going to continue to be flat likely until at least September, potentially October. GDP forecast also came down just a little bit, although he did say he still sees the economy growing at a solid pace. Unemployment was also very low, but he's also concerned with the somewhat elevated inflation. So a lot of the same information, but arguably just a little bit more hawkish than the previous iteration. Moving over to fear and greed, we actually stepped up a little bit to a 54 from a 53. A little bit surprising there, but you can see markets moving lower, still in fear on momentum. My guess is that's going to move back down towards that 125 moving average at 5,800. Strength starting to roll over just barely there. Breadth also in extreme greed, but also rolling over. You can see the high, kind of lower high setup. Looks like it's falling. Put call ratio also spiking once again in regular fear. Volatility kind of chopping around, did pull back a little bit today. Safe haven demand still flat here at 0 in regular greed. And then the VIX has been, and then junk bonds has been grinding slowly higher, but still in neutral. Moving over to the economic calendar, you can see CPI for the Eurozone in line with expectations, continuing jobless claims a little bit higher than expectations, job starts, housing starts not super great there, which was actually asked during the FOMC. He didn't really care too much about it. And then looking at Atlanta Fed GDP, that came in just a little bit lower. Inflation expectations you can see are a little bit hotter than the previous read, especially in the short term. That is what Fed Powell was mentioning during the Q&A portion. And then of course tomorrow you have Juneteenth, and then for the Friday you have Philly Fed Manufacturing, and that's just about it to roll up to finish up the week. Moving over to Max Pain, options came in a little bit from 4.6 million down to around 4 million. Put call ratio also came up a little bit. Max Pain still quite a bit lower at 580, still expecting markets to head in that direction, at least below 590 makes sense to me. So 580, wouldn't expect too much lower than that. 575 would be the absolute lowest that I would expect. Either way though, markets look like they're set to go lower towards that Max Pain price. Moving over to the charts, you can see it wasn't down a whole lot on the day, just 9 cents, but the price action does tell a little bit different story here on the hourly chart. We are right at that key level on the SPY at 597.63. You can also see that high, much lower high set up here, and then looking for this to move down to that kind of 598 area. Momentum bearish, RSI bearish, volume coming through towards the end of the session. Saw a slight move higher, and then we did get that continuation lower here in the after hours. So for me, again, this still says topping pattern, and that the strength in this topping pattern is starting to fade. We're well below all the EMAs and SMAs. We did test that a couple times, got a little bit of a bounce, but now we're definitely below it. Do we head into that area for Max Pain? I think that is a pretty good premise to trade off of, at least for now. Then moving over to the SPY charts here, you can see this continues to be consolidation, bullish to bearish, back to bullish, back to bearish, but now it seems like we're headed back down to that trailing stop around 594.12. That's what I would look for at the very short term. That's what I'm looking for. The lowest ATR band, 593.02, makes sense. And then looking at that 4-hour chart, you can see right now trailing stop 594.84. Once we get to that level, then we'll definitely see that flip into bearish conditions. And right now you have 592 525 being that 89 EMA. That's that next zone to look for. Lowest ATR band would be 588.30, which based off the 4-hour chart means that's as low as we are going to go over the next day, maybe 2 to 3 days of trading. Moving over to the NASDAQ charts, same thesis here. On the daily, it was down only 9 cents, exactly the same there. But look at it here on the hourly chart. You got that high, lower high setup here. Didn't quite take out the low yet, but I do suspect that it will. And then you can see that next level, 523.24 is the next support, and that is pretty close to in line with that 21 EMA here on the Qs. That's going to be 524.76. So that's what we're looking for in that 523 to 524 area as the next target. If that next one breaks, then you have 509.24 as the next zone below that. I wouldn't expect to get there tomorrow, but I could see it happening over the next week to 2 weeks. Moving over to the NASDAQ on the Tasty charts here, you can see that trailing stop 524.68. So again, pretty much in line with that previous low from back here on the 13th, in line with those charts that we just talked about. 89 EMA would be that next zone of resistance. Next zone of support, that would be 522.10, and then your lowest ATR band here, 519.07. So we'll see if we can get into those areas. But looking at the hourly chart, you can see we're definitely in bearish conditions. 532.25 is your resistance. We did get very close to eclipsing that, did touch it, and then rejected right there. And then you can see lowest ATR band 524.23. So a lot of confluence there between 523 and 24. Moving over to the Russell and the Dow, the Russell was up $1, up 0.5%, still finding support in that 208.22 level, and the 21 EMA in there, 208.49. Actually did decide to sell a put for the Friday session. Decided to see if we end up getting a little bit of a hold in there. The volatility on the Russell was kind of a lot based on the price action that we were seeing, and it did hold up well. You can see it was the only major index to stay positive on the session. Dow, on the other hand, selling off 0.06, still well below the level. Your support is still 418.38, pretty much in line with that trend line there. Momentum bearish, RSI bearish. So we'll see. Does the Russell hold up and outperform? Definitely something to watch for tomorrow. Moving over to Apple and Microsoft here, you can see Apple was slightly positive, up about 0.5%, continuing to hold in that same area that it's been holding, 193.96 up to that 196.79 level. And then you got Microsoft right back at all-time highs, continues to be extremely strong. Momentum bearish, RSI super overbought. None of that matters. It just continues to go straight up from here. Moving over to NVIDIA and Tesla here, you can see both of these are positive as well. Tesla up 1.8%, holding support here at 313.80. My next level, 324.47. Can it get above there and push towards 336? Right now, this does look like a potential consolidation. The momentum has faded. RSI still a little bit bearish there, but it's actually holding up okay in here. And then you got NVIDIA, again, very similar structure to Microsoft. We've been talking about that. Does this go back to that 149 area? It does look really, really strong. Nice close on the highs there, up about 1%. Does seem like it's accelerating just a little bit. The only concern here is the RSI, continuing to fade on RSI as prices going higher. Moving over to Amazon and Alphabet, these look significantly worse here in the Mag 7 than the two we just looked at. Amazon down 1%, Google also down 1.8%. Back towards that 200, momentum bearish, RSI bearish. This is likely to go at least to the zone of support here around 168.24 in there or so, actually 170 area. And then looking at Amazon, it's right at support, 212.25. Does it come back down here to this kind of consolidation of EMAs at 208.96? And then you got the highly traded zone and the 200 in here between 203 and 204. So those are some zones to watch for. It does have a lot of support in here still, but this does look like a high, slightly lower high or double topping pattern on Amazon. Moving over to discretionaries and staples here, you can see we did get a little bit of a sell on staples, but discretionaries held up pretty well, honestly. I thought these would sell a little bit more, especially with Amazon selling, but I guess Tesla was able to hold it up here at that 210 level. 200 SMA still in here at 209.60. If this zone breaks, which I do think that it still will, momentum bearish, RSI still bearish there. I think we're headed back down to this 203 to 204 area, and then you have that huge gap fill obviously still in here that needs to get filled, and then staples continuing to look like it's going to sell here down to 79.90. That is the next zone of support. Momentum bearish, RSI still bearish, so still looks like an everything sell for me. Moving over to 20 and 50-day breadth, you can see both of these had a little bit of a move higher here. 20-day catching some support in this 36 area, still below the 50 line. And then looking at 50-day breadth, was actually slightly negative on the session. Does this start to show a little bit more weakness cutting through that next level at 62.25? That is what we're watching for. But we did try to go a little higher, did end up rejecting and going bearish, momentum bearish, RSI bearish. Next trend support would be around the 50 area and the 200 in here between this kind of 50 and 55 area. If that breaks, then I think we're going much lower. If we find support in here, then we could see some higher highs to come. Moving over to the dollar here, the dollar did go higher on the session, not a lot, but a little, 0.03, and now we're right at the 21 EMA. I do suspect that this is going to be a divergence setup with a low, slightly lower low with the RSI hanging out in there. You can see really nice strength on the hourly chart with a low, higher low setup here. You can see that second push is always the strongest. Do we get a little bit of consolidation here and then a continuation higher up to that 99.8 area? We'll see. Obviously, this is good based on what we got from the FOMC. They're a little bit more hawkish. Higher for longer rates is usually good for the dollar, but not so good for equities. Moving over to bonds, as you would suspect, this was a nice move here for bonds. Everything that was said was good for bonds. JNK up about 15 cents, TLT up about 15 cents. TLT is falling just a little bit in the after hours, but either way, still like this as an opportunity. I was watching some other commenters here saying they are expecting TLT to head into that $100 zone before the end of the year, and I do tend to agree with that. You got a lot of time left in the year. We are expecting at least 2 more cuts and some more cuts next year. TLT should be headed much higher into this kind of 92 to 100 area, which if that happens, that is certainly a lot of opportunity over the next couple of months. Moving over to the VIX. The VIX actually did end up basically flat in here, down just a smidgen right at support at the 20 level. I am still expecting this to head into the 28 area in the not too distant future. Does that happen tomorrow? Probably not. The momentum did fade a little bit. The RSI is still bullish, so a little bit of mixed signals here coming out of FOMC on the VIX. Moving over to my accounts, you can see net positive $94 on the day. I did put on that one Russell position all the way down here at 208. That is in a small loser, but I don't think I'm actually going to end up losing money on that tomorrow. You can see it's holding up really well in the after hours. It was positive on the day. Relative strength was really, really good. So decided to take a position in here. And like I said, it's at 208 for 77 cents credit. So your actual buy price down there is 207.23 or so. And then you can see the puts here on the Qs. Some more credit coming in on those, expecting the Qs to go lower. And that is drifting a little bit lower after hours. Still plenty of time on there. Just going to continue to watch that one drift lower. So that's the thesis for now, expecting the Russell to kind of hold up a little bit while the Qs fall, hopefully, into that Friday session. Let me know down in the comments section what you thought of the FOMC. Was he dovish? Was he a little bit more hawkish like I think that he was? Does any of it matter for markets, or was this the death of the last potential catalyst to push us to higher highs? And now markets are going to move back down to a more reasonable level. Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.